you want to know how to trade sideways market? Sideways market in the sense there is no such momentum in the market. Most of the traders lost their money during this sideways market, especially option buyers. One of my subscriber has asked me, she is Prajakta Jadhav. She asked me like, ma'am, please make video on how to trade sideways market. I think it's difficult to trade and understood sideways market. Yes, I felt it is really necessary to do a video on how to make money in the sideways days. And if you see this chart, this is a sideways day, and do you have any idea where you can enter the markets? Please take some time and think of it where you can take your entries or your stop losses. I think you don't know where to enter here because this is just like some candles here. Now, with the CPR pivot points, you can be able to trade the markets, especially sideways markets also. In this video, I am going to tell you how to trade the sideways market with good risk reward. What are the rules to look when you are taking the trades as that day is a sideways day. Everything will be discussed in this video. By the end of the video, you will be able to take trades confidently during the sideways market. Now let's get into the video. This chart without CPR pivot points, there is a lot of confusion here. Let's see with the CPR pivot points. See, these are the three lines. This is the CPR, and when you take the trade at this area on that particular day, you are going to make some money. Now let's get into this, deep dive into this and learn what we have to understand for trading these markets. Let's go to my mind map here, where you will know with CPR pivot points how to trade sideways market. This is the sideways market setup. In this, I'm going to discuss about the rules you have to follow, okay, and how to know the trend. Everything step by step I will explain, and by the end of the video you can take the trades confidently. Now, in order to trade the sideways market, first you need to find whether it is a sideways day or not. To finding it is a sideways day or a trending day, you need to learn about the concept of pivot width analysis. Pivot width analysis is something that tells you whether that day has the probability of making a sideways day or a trending day. Now, see here, this is the CPR. There are three different parts of CPR here: the narrow CPR, average CPR, and the wide CPR. Narrow CPR, in the sense the gap between the three lines of the CPR is so narrow, we safely assume that that day could be a trending day. The gap between the lines, three lines, is average, some gap between there, then we consider as the average CPR. That day could be a trending day or a sideways day according to the situation. Now, the wide CPR. How do you know? This is also having some gap, this is also having some gap, but how can we say that is a wide CPR? During the live markets in my earlier days, I always find a difficulty choosing or knowing about the wide CPR and the narrow CPR. The reason here is when we are zoom in, okay, when we are zoom out like this is looking as average CPR. But when we zoom in the live market, the CPR is going wide and wide and wide. That time I could not take decision whether it is a sideways day or a trending day. So I have rigorously backtested and came to a conclusion that, see, this is my conclusion. In Bank Nifty, that too in the spot chart, the wideness from top CPR to bottom CPR, if this difference is 80 points or greater than, I personally consider it as wide CPR. This is not in any books, but with the backtesting along with the experience, I trade like this whenever there is a wide CPR. The reason for this is to get good risk rewards. When the CPR is very big, If you place your stop loss below the CPR, that is not going to be a good trade. The end result of the trade could be most of the time stop loss triggering. So please write it down somewhere. For Bank Nifty, it is greater than or 80 points in spot chart. For Nifty, it is greater than or equal to 40 points in the spot chart. No worry, I will explain this in detail. Okay. Now, see, I can explain this in the detail. Let's go to this chart also. Okay. See, this is the wide CPR. Can you know that? I am zooming in, zooming out. So this is moving. For that, you have to measure this. Go to the measure indicator here. Measure tool here. Come here and measure this length. See, this length is 130 points. 130 point in the sense, what is it? This is greater than 80 points. So, I'm talking about this. In Bank Nifty it is greater than 80 points. So, I consider it as a wide CPR. So, what will I do next? Let me explain this. I'm going to mark a level here. Okay, because I wanted to be in long position, I'm going to mark the long position here, keeping my stop loss points something like this. Every day I would like to risk only 40 points in the spot chart. Okay, when you are risking 40 points and aiming for 1:2 risk reward is a good trade. Okay, even before the market opens, I plan like this. Why? Because we are already having the tomorrow pivot levels. Okay, by knowing this, tomorrow these three lines are the tomorrow lines. So once I know about these lines and the wide CPR, I would like to mark the levels like this with good risk reward. The reason here is when price comes in this risk area, you will know that in the live market, high tension market, you will know that you are going to have some good risk reward. For that reason, I'm just marking this. Now, after taking this, I will wait to take my profits according to the system. Okay, let's go here and explain the step-by-step process how to trade sideways market. Okay. In that I have explained about pivot width analysis. Now, to trade the markets, any market, you have to know the trend of the market. Okay, how do you know the trend of the market? Let's go here in the Vivaldi and check it out how to know the trend of the market. Okay, if you are taking trades against the trend, what will happen? Think of it and I'm going to come to you within 5 seconds. What will happen if you are taking the trades against you, against the trend? Okay, I'm here to explain this clearly. For example, you can see this, the trend here is the downtrend. If you do take the trades expecting the market to go up, what is your end result? Okay, the end result could be the loss because you are acting against the market. The market is in the downtrend and you are taking the trades in the bullish way. So for that reason, you need to know the trend of the market you are trading. For me, I am trading Nifty, Bank Nifty because I am a specialist in Nifty and Bank Nifty. So then what happened? Let's see here. All these days, the index is trading down and down and down, and in this way you can learn about how to know the trend of the market. Suddenly one day the closing price of the market is above R1. Above R1, this is the R1. I know that if you know CPR pivot points, this is the CPR. And this green line is the R1, R2, R3 and R4. Okay. When the price closes above the R4, this is the closing price, you can see. Then the trend is officially changed from downtrend to uptrend. Downtrend to uptrend. You can see this in the example also, example chart also. See, the trend is going upwards and upwards after it closes above R1. Okay, if you're still having some doubts on that, I would like to show you one thing here. This is the CPR blueprint which I refer every time I do a video on CPR pivot points. Why? Because this is the blueprint. When you understand this, you will be able to do good analysis. Okay. Now see here, the price is for example, the trend is downtrend, like in the chart, Vivaldi chart, and suddenly the price opens somewhere here. Okay, somewhere here throughout the day it is like this, but it closes here at 3:30. It closes above the R1. Okay, this is from downtrend to uptrend. Okay, change from downtrend to uptrend. I'll give you example for the uptrend to downtrend also. For example, the market is, just a moment, the market is moving up and up like this. Okay, suddenly the market opens somewhere here, and throughout the day it is trading, and by the end of the close, here the closing is very important. Below S1 we consider it as up to downtrend officially. So you have to take the trades with the bearish view next day onwards. Okay, this is how you can find the trend of the markets in the live market. See, I have explained the CPR blueprint also. Now, how to know it's a wide CPR? As I have already discussed this, because Bank Nifty, if it is greater than or equal to 80 points, you can consider it as wide CPR. In Nifty, it is greater than or equal to 40 points, you can consider it as wide CPR. This is according to the backtesting data. As per my experience, I used to take the trades like this. Okay, now let's come to the rules. Any strategy you want to trade in the markets, you should have some rules. Okay, with that rules, you will make yourself disciplined. With discipline, you can make money from the markets. Without discipline, without rules, going there, gambling there, at times you can get money, but by the end of the month, you will lose all your money. Okay, for that, I have created some rules here. Okay, price, whenever you are expecting sideways market, what you have to do to take the trade, price should come to CPR. The number one rule, write it down somewhere. Price should come at CPR. The second one is, you should place your stop loss below the CPR. If you are taking a bullish trade, you have to place your stop loss below CPR. If you are taking a bearish trade, you have to place your stop loss above the CPR, or you have to place your stop losses at the entry candle. Okay, this may be little bit confusion. If you are new to this concept, I will explain this in the charts. Okay, all these rules I will explain this in the chart. So aim for 1:1 risk reward or 1:5 risk reward. Aiming more than that in the sideways market is not so good strategy. So when I am backtesting, if we are aiming for 1:1 risk reward or the 1:5 risk reward, we can make money. Or the next pivot, if the pivot is really near, we can take our profits at next pivot. This will depend upon the day's price action, momentum, situation. Okay, you can consider it this whether to take 1:1 or 1:5 or next pivot according to the context. Now you have to stay with the 20 EMA most of the time. Why? Because trading with 20 EMA is called trading with institutional investors who can move the price in their direction. If you are with the 20 EMA and you are with institutional investors, then you can have greater edge here. Now, all these rules I will explain it in the backtesting data with the charts. So please write down these rules so that I will explain one by one. Okay, first the price should come to CPR, then you have to place your stop loss below it, aim for 1:1 or 1:5 risk reward, try to be with 20 EMA. Okay, now let's go here and explain this. Okay, the ideal setup looks like this. Ideal setup in the sense, this is a wide CPR, right? By measuring this with the measure tool, you can understand this is the wide CPR. Okay. In this chart, I haven't done that, but it's a wide CPR when I have back tested. Now see here, the rule number 1 is the price should come to CPR. Okay, it's done. The second one is you have to place your stop loss below the CPR. See, you can place your stop loss entering after this candle, place your stop loss below the CPR or the entry candle. And let's see what is the third rule here. Aim for 1:1 or 1:5 risk. Okay, you can aim for 1:1 or 1:5 or the next pivot. In this case, the price goes to the next pivot. Why? Because we can aim for next pivot. Both the indices are moving in same direction. For example, it is taking support at the bottom CPR, same trend, same things happening here. In this case, you can aim for the next pivot. This is the ideal setup to trade the sideways market. When you see anything like this, taking support from the bottom CPR, if you want to be bullish, expecting that day is the uptrend day because of the trend analysis, you can take your entry after this green candle. Place your stop loss below the entry candle. Okay, and aim for 1:1, 1:5 or the next pivot. When you see such setup, you are having the great probability in your side. Okay, now the next one here is, see, this is, I have marked here, the stop loss is 45 points. What I have told you, the stop loss is 45 points. See, it is, if the Nifty is greater than or equal to 40 points in spot chart, we consider it as wide CPR. So, see here, at here 45 points, and this is a wide CPR. You want to be bearish in the market because the trend is downtrend that day. So what you have to do, after it closes below the 20 EMA, you can enter the markets. Okay, you can enter the market, place your stop loss above this candle and the CPR. You can aim for 1:1, 1:5 or the next pivot. If theta decay is very high, as you are an option buyer, you can exit with 1:1 risk reward. That day theta decay is not so much, you can wait for the next pivot to touch. I always say that there is a need for an intelligent trader who takes spontaneous decisions in the market, and if they do that, they can make money from the market. You should not be like, every time it comes here, I will do this, I will do that. Every time, it's not like that. You need to solve a puzzle every single day. The intelligence and brilliance comes here when you solve the puzzle and make money from the markets. There are many persons over there in the markets trading the markets, but top 5-6% of the traders are making money. Rest of all the traders are losing money. Okay, why? Because everybody is having the strategies. They don't have the discipline and the psychology to trade the markets. Now, the next example. See, I have told you this is another ideal setup. Okay. For example, see, if you wanted to be bullish in the market, assuming that the trend is uptrend. Okay. Discussing trend also is not possible in this video. Why? Because it will become big video. Okay. That's why. Assuming that the trend is uptrend here, so you wait to take the trade at the CPR. Okay. Bottom CPR, and this candle closes above the bottom CPR along with the 20 MA, which is a good ideal setup for trading the sideways market. Now you can know that you can place your stop losses below the CPR or the entry candle. In this case, you have to place your stop loss below your entry candle. Why? Because this is a big stop loss, right? This is a big stop loss. When you place here, it will definitely trigger your stop losses. When the entry, the break, it is something called the close above these two areas. When this happens, you have to place your stop loss below the entry candle. But here the stop loss is very high. What you should do in such situation? Tell me what you should do in such situation. Think about it for 5 seconds and tell me in the comment box. I would be very happy if you say the right answer. Okay, what you have to do here is you have to wait for the retracement. Okay, like I told you to take the long position to put your stop loss. This is a screenshot, that's why I'm not able to show this. Put that this indicator here. When price comes to your pink region, just take the trade and get out of the market with 1:1 risk reward or 1:5 or the next pivot. In this case, this is the next pivot. You have to decide it in the live market. Okay, nobody can say whether it is 1:1, 1:5 or the next pivot, but during the live market you have to take this decision. Now tell me, this is the wide CPR. The price not coming near the CPR throughout the day. Will you take the trade as an option buyer during the sideways market? This is a question for you definitely if you want to make money from the markets. Why? Because trading the markets needs some intelligence. Why? Because when you are trading anywhere, coming anywhere, any pivot, any level, no money will come to you. Trading at the high probability trade location, doing the pre-market analysis will definitely give you money. Okay. Now on this day there is no price near to the CPR. If you take any trade somewhere here, definitely you would have lost your premium due to the theta decay. Why? Because there is so much of consolidation here, and this consolidation will take your premium, and it acts, theta decay acts against you. When you take the trades at the CPR, maybe there is having the theta decay also there, but chances to make money is high. The probability is high. Okay, likewise, don't take trades when the price is not near CPR. See here, this is another one good setup, but you need to learn a new thing here. See, the price comes here at the CPR and you have to place your stop loss above the CPR because this is a bearish trade. Okay, this is a bearish trade. So what you have to do? If you see this is a high risk reward trade, high risk trade, because there is so much of gap here. What you should do in this situation? What you should do? Think of it for a second. Use your brain. Always use your brain in the market. What you can do? Okay, you can't take the trade here. See, it pushes down the price from 20 MA and closes below the 20 bottom CPR. So where you have to put your stop loss in this case? Above the CPR. So this is a big risk reward during the sideways market. But you can do one thing here. You can position size yourself. Let me explain what is position sizing. Okay, just give me a second. Okay, where is it? I have to draw something. Okay, position sizing. For example, if you are trading with 5 lots, okay, on this day the risk is very high, and you can know that this is going to be a successful trade at that moment. So what you have to do is position size yourself. Position size in the sense, decrease your 5 lots to 2 or 3 lots. When you do that, if it triggers your stop loss, you are in limited loss. LL, limited loss. Okay, when you are in limited loss, your emotions are in control. You can trade the markets tomorrow also. If you are risking that big risk with 5 lots, if it is a SL triggering trade, what will happen? Your psychology mindset definitely hurts. Okay, so when this situation occurs, you have to position size yourself, decrease your position size, and place your stop loss above this level. Okay, if you place your stop loss above this entry candle or the middle CPR, what happens? It will definitely sometimes will come there and trigger your stop losses. For example, see in this case, after the close of this candle, sorry, after the close of this candle, you have to enter here. Okay, and you have placed the stop loss above the entry candle because of the big stop loss. Assume that, see what happens, it came till your stop loss triggers your stop loss coming back in your direction. I'm sure that most of the traders who is watching this video will face this in their trading career. So you have to place your stop losses above this area. Now see here, you can see here the concept here, the points are the area of this CPR is 100 points. So I personally consider it as a wide CPR, and I would like to stay at the bottom CPR. Okay, I would like to stay at the bottom CPR, but this candle is a big candle. Then what I have to do now? I have already explained this scenario. I am just giving 5 seconds. Understand this. 1, 2, 3, 4 and 5. What you have to do is you have to wait for the retracement. Place your long position candle here, tool here, and you have to wait for the replacement. If it comes to your pink region, you can take the trade. Take 1:1 and 1:5 risk reward. So get out of the markets. Same happened in this area also. We know that we have to stay here, and this is the big candle. We can't take that much risk, so we waited to come the price to retrace to our level. When it comes to our level, we definitely take the trade without fear and wait to take our profits at 1:1 or 1:5 risk reward. The next example. Okay, the next example here, as I have told you, be with 20 EMA. Okay, be with 20 EMA. You have to understand this. Being with 20 EMA in the sense, the 20 EMA is far away from you. So in such cases, you can take your trades at this candle, place your stop loss above the CPR, and you can wait to take the profits at the next pivot, because the next pivot is very near. Okay, for example, in this also, this is a big candle with big stop loss. What I say is, you have to place your stop loss above your entry candle or CPR. In this case, you have to place your stop loss above your entry candle. Okay, so what you have to do is wait for the retracement. Don't feel the FOMO, fear of missing out, because this has happened. But if you do that, you can do it with position sizing. But in this scenario, I would suggest to wait to the price to retrace this area. Sorry, I'm talking so much, that's why coughing. Okay, now you can wait here and take your trade in your direction. So this continues and continues. So see here, will you take the trade here? Okay, will you take the trade here? You can take the trade at this candle. Why? Because there is a rejection from the 20 MA. Okay, like that there are so many scenarios and you have to be fully attentive and focused in the market, then you can make money. Okay, after some experience you will understand why you should take trade at some point, why should not take trade at some point. Okay, here we don't have any shortcuts. We have to learn the system, apply the system in the market, face the profits as well as the losses, then you will go to the profits phase. Okay, have patience to get that situation. Okay, thank you so much for watching my videos, and if you like this strategy, just back test it for about 6 months and then apply this in the live market. You can see that this strategy is so powerful. Like this, I am having strategies for different market scenarios. Even if it is opening gap up or gap down, something like this, I have different scenarios. If you want to learn from me, I am offering a course, and if you want to learn about the course details, everything, you can approach me in my mail ID or you can join my Telegram channel. You can ask me in that. The Telegram channel QR code is in the thumbnail. Okay, thank you so much for watching for my videos. Thank you.